you tired of all the uneducated noise you're getting from the droves of YOLO meme coin peddling douchebag gurus out there trying to use you as their exit liquidity? Would you rather learn a competent university level set of skills that will guide you in managing and investing for the rest of your life? Join us 3 days a week at Digital Investor. Develop your knowledge of game theory, cognitive bias, macroeconomics, monetary theory, investment theory, psychology of the crowds, and more. For more info on Digital Investor and how it can help you, reach out at nickblacknext.com.
All right. Okay, so let's get to what housekeeping do we have? Well, I had a couple of little news bits. I thought I didn't want to wait till tomorrow. Some of them are kind of fun. We'll hold off on the AI news till tomorrow. We'll focus just kind of on, brain stuff. Today's brain stuff. That's what the office hours are for. Less about the money. Although, the better you are at like making decisions and being pragmatic and, being a critical thinker, then you make more money. And I hope you guys, for those of you that didn't see Tuesday, where we went into the kind of incremental decision theory, you should go and watch that one. But wear the earmuffs, because I think we did an amazing amount of profanity. So maybe today, instead of a New Year's resolution, my new day resolution is no profanity today. See if I can get through it. Of course, someone's going to tee up. Someone's going to ask a Jamie Dimon question or something like that, and then I'll have no choice. So don't do it. Don't trigger. Let's see. When our countdown goes to 0, well, I don't know what happens then. I guess then we will find out how far away we are from what a bull market would look like. I think in order to really be in a bull market, it's bullish already, but in order to really be in a bull market, I still think we have to be past our all-time highs, and we're not there yet. It wouldn't take much if Bitcoin went on a runner and got to, 55, 60K, then the entire market would lift, and we'd probably already be looking at a 3 trillion market cap, like total market cap crypto space. But if you believe guys like Tom Lee over at Fundstrat and all that there's 150 trillion, sorry, that was 1,000 times off, $150 trillion sitting in wealth on the sidelines, and that if 1 to 3% of that made its way into Bitcoin, you get anywhere from $100 to a $300,000 Bitcoin. Maybe. It's certainly possible. Also, the scarcity of Bitcoin on exchanges. So, and think about this. In April, when the halving occurs, it's not like you're going to see the day after the halving. If it's the 24th of April, the 25th, stuff doesn't come unglued. But if you realize that these miners, okay, so put yourself in the position of a Bitcoin miner, okay? You have a bunch of equipment, you have facilities, you pay electric costs, you pay human, there's fixed and kind of floating costs. So the fixed costs are like your equipment for the most part, but before you roll it over, and whatever debt you took on to buy your facility or rent it or whatever, and then all of your manpower and employees and crap. So in order to do all that, you have to run a full business, which means you have to sell some of that Bitcoin on a regular basis. So you take in 10 Bitcoin and you sell anywhere from 0 to 10 Bitcoin to run your business, to go through upgrade cycles and buying new equipment and all this kind of stuff. That's what it takes to be a Bitcoin miner. Those of you that think you're Bitcoin mining by giving your money to somebody else and they're like, yeah, we're mining. No, you're not. And they're probably not either. It's most likely a scam. Someone was telling me at the coffee shop this morning, yeah, I'm doing Bitcoin mining. I'm like, how are you doing that? You have a crypto IQ of like 17. Like my cat knows more about crypto than you do. Well, I give it to my buddy and he's mining for me. I'm like, no, he's not. What you did is you gave your buddy, you just gave him money because or he's an idiot too. And he does not know what he's doing and he thinks he's mining, which he's not. So anyway, but for those that are mining, when the block reward gets cut in half, that means that they are going to be doing the same amount of effort for half the reward, meaning the economics of being a Bitcoin miner change dramatically on the 23rd or 24th of April, whatever day that finally turns out to be. And there's a little bit looseness because not every block in Bitcoin is exactly 10 minutes, but you get it, relatively 10-minute blocks. Well, usually. So we get to the 24th. On the 25th, the reward per block, so every 10-minute block that's found, that's kind of discovered, you could say, by one of the mining rigs out there, it's going to get a block reward that's half as much as it was the day before. So that's going to propagate out. So now all these mining facilities are making half as much Bitcoin. So it's kind of common sense. You look and go, oh, wait. So if they're making half as much money as they were yesterday, then something's got to give. Either the price of Bitcoin has to escalate. And again, one does not create the other. If the block reward goes from, 6.25 to 3.7 to 3.75 or whatever, or 3.125 per block, that block reward getting cut in half doesn't make the price go up, right? What makes the price go up is there are more people purchasing than selling. So don't confuse the two things. Simply cutting the supply in half doesn't make price go up. There still has to be sufficient demand. If demand is the same, if there are the same amount of people, kind of pent up demand for the asset, and then there's half the supply, but that's not a truly genuine statement either, is it? Because there's still Bitcoin floating around exchanges. There's people that have it in their wallets, and as the price might go up, they might choose to sell. So simply cutting the supply, when you hear this argument, like the supply is getting cut in half, so it's going to double. That's not a really good argument. But what you are going to see is a lot of these mining companies decide if they're going to stay in the mining business or not, and to what extent. Because if they're only getting half as many Bitcoin and the price of Bitcoin doesn't change, they're done. Many of them are done. They're not making, I would be shocked if any of them are making 50% profit. I think there's just no way, right? Not on the average. Like there's no business you get into and you make 50% profit. Everybody would do it. So that's going to be, a line in the sand for a lot of these companies. So many of the smaller ones, well, it's not even fair to say. It doesn't matter what size you are. They either can afford or can't afford to continue going. They'll scale back, they'll shut down, they'll flip off machines, whatever, which lowers the difficulty because there's less competition, which means whoever's left has a greater likelihood of discovering Bitcoin based on the way this system works. So none of those things directly make the price go up. But if those things all occur and demand is the same, you say, okay, well, is the demand going to be the same, less, or greater? Well, I would say the same or greater in the future, because now we have all of these people that will have access to Bitcoin through ETFs that never did before. And so even if that only adds a small percentage, you could see very quickly that since there's not a lot of new Bitcoin, it's going to be like, what, 450 Bitcoin a day will be what is being unearthed. I think it's about 900 a day right now. So then you go to a situation where there's just less new Bitcoin showing up on the markets, in exchanges being sold. And then you could get a pinch where the prices get squeezed up. And of course, exchanges will do as much OTC out the back door transactions as possible. But at a certain point, they run out of tokens, right? They just run out of OTC sellers. And OTC takes two people. It isn't just Coinbase, right? Coinbase is a mediator in OTC transactions. In that case, there's nothing code-based about it. It's actually a desk you call. They act as an escrow. You just trust that everything works out. But you know, Coinbase is Coinbase, and they have a lot of institutional clients that want to quietly move tokens around. Good for them. But that too, you know, you're going to see that behavior start to curtail because everybody's not a seller. So you could see a very shocking response due partly to the anemic amount of Bitcoin that is available, as well as that there's a lot less new Bitcoin showing up in the world through mining, and all of the marketing that goes around that, where they will try to tell everyone that the halving's going to double the price. And historically it has, but not directly. It isn't the day after the halving that the price goes up, Bitcoin goes up. It's typically many, many months later. I think it can stretch out to like 14 months or something. So it's not like the day after, but people are getting better and better at trading earlier, at making decisions earlier. So this is certainly going to be one of the most vocal halvings. Well, it will be the most vocal halving because it's going to be pumped out. So then you think, okay, if the halving is in April, how do you prepare for that? Well, if it's in April, they're not going to go, if April 24th is the halving event, they're not going to on the 23rd start advertising. Right? It's very likely that they're going to start putting they're going to start marketing to people February and March. And Grandma Smith, you better get in now. You better get in now before this halving. You know what happens, blah, blah, blah. So I think when the marketing machine spins up, that's when you really see some drastic moves based on the like overall anemic state of Bitcoin on exchanges and then the daily emanations after the halving. So there is that. Let's see. Yeah, Jamie Dimon, what a D-bag. He's so stupid. And the thing is, like, if you're Jamie, come on, man, you haven't spent 5 minutes. Like, if you hate something that much, why don't you just read the abridged version? Why don't you use GPT-4 to read the white paper? Jamie's so funny. He's like, I'm never going to talk about this because that's all everybody knows now that all you have to do to get him mad is just talk about Bitcoin. I hate it. They should shut it down. You don't really hate it, Jamie, because your kids own it, your employees own it, and you guys trade it. So which is it? You hate it maybe because you're an old stupid dinosaur, or is it more likely that he's just towing the party line, catering to his caucus because he's got some designs after he leaves Chase, which I think he's getting ready to leave Chase. I think he's pretty much done. It seems like that, like by his behavior about like he's selling a lot of Chase stock, but just for tax reasons. What do you mean you're selling for tax reasons? Well, I'm just selling for tax reasons. That doesn't make any sense. You're selling for money. You'll pay tax on that. You're not selling for tax reasons, you dick. You're selling for money, for currency units. It's like, oh no, it's just tax reasons. Hey, Grandma, why'd you sell all your jewelry? Why'd you sell all Dad's jewelry? Oh, it was tax reasons. It's not like I got money. It's tax reasons, purely tax reasons. Shut up, you old bag. So when he talks so stupid about Bitcoin, I think they're just going to turn it off. I don't know. What does he say? No one has shown me that there's a capped supply. No. So nobody at Chase Bank, not one person you've ever talked to understands anything about the very first crypto asset on the planet. Not one person in all of Jamie Dimon's experience, in all of the people he's ever met in his entire life, can explain that there's a cap supply. Because in the same conversation, he goes, oh, well, I think there's another thing. I guess he assumes that people live for 200 or 300 years. Because what did he say? Something like, I think at the end, when all the Bitcoin come out, Satoshi's just going to erase it. Okay, so Satoshi in the year 2140, like what world does Jamie Dimon live in? Does he? I'm not sure if he even knows what he's saying when he's saying it. Jamie Dimon used to be very sharp. Jamie Dimon is no Warren Buffett, and he's definitely no Charlie Munger, right? At least those guys talk crypto with some semblance of sanity. I mean, they don't like it. They say they don't like it. They hate it. They think it's like degenerate gambling and all that, but at least they stick with their guns. They don't say stupid stuff. Like, basically, Jamie Dimon's like, I bet that 300 years from now, they're just going to turn the sun off. What? What do you mean turn the sun off? What does that even mean? No, you don't say stupid stuff like that because you just look like a boob. I don't even want to cuss this guy. He just looks like a dumb old clown. And so I hope that every chance they get, they try. I hope that everybody that sees Jamie Dimon just says, what do you think about Bitcoin? What do you think about Bitcoin? I'm going to have something in my heart where my heart sucks and it just stops because Bitcoin. So stupid. Anyway, he's a dummy. Okay, let's see. Let me get down here. Let me see if I can knock out any quick questions. Okay, that was like as close to a rant as I can get without profanity. Some of those guys don't even deserve the profanity. He's so dumb. If you listen to that thing, he makes all these weird assumptions through that. If you get a chance to listen to it, he really sounds like an idiot. And not only that, he sounds like an angry idiot. Like he's just really mad that the rest of the world doesn't get, like he gets it and none of us get it. You know, what is that saying? Like, if you hear somebody, if you point at somebody being an a-hole, they're an a-hole. If everybody around you is an a-hole, you're the a-hole, right? Like at a certain point, doesn't he look in the mirror and say, hey buddy, you're an a-hole? You know, those guys have been, didn't we do a show where we just talked about all of the criminal behavior of Chase? I mean, it's billions and billions of dollars of felonious criminal behavior. Of course, they just pay fines. And because that's all you do as a banker, no one ever like has to pay the piper as a banker. But like they've committed so many crimes, like so egregious against like, and their big thing is they step on immigrants, right? You know, that little scam that they do where they basically, it's pretty obvious who immigrants are that have accounts at Chase. And anytime they bounce a check, which people that keep a balance of $100 or $200 in their bank account, yeah, they're going to bounce some checks because they're trying to like live. They're trying to survive in America, which is an effing expensive country to live in. It is. And so you try to make your life better. You cross a border, risking someone shooting you. You get here, you set up, you're doing everything you're trying to do. You pay the man, you do all this kind of stuff. You do all the work that regular Americans have no desire to do. You do the worst jobs to kind of like make a life better. You finally get an account open with Chase. You have a little bit of bad luck. You bounce one check. And what they do is they ping your account and they say, oh, he just bounced a check. And they keep hitting you with charges. They know that you're not going to, if you bounced a $39 check, they know you're not going to like be able to cover it. So what do? They keep processing the check over and over and over, like 7 or 8 times, and hitting you with a $35 fee. Bang, 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 until your account is wiped out. Sorry, it's all gone, buddy, and you owe us this. And they've been taken to task for it, like in federal court, and sued and found guilty of all this sketchy behavior. and they do all sorts of stuff with like money laundering and all this kind of stuff. So for that guy, lest we not forget the London whale. Oh, it's just a mistake. Oh, right. So you have a guy that you know personally that trades billions of dollars, but you don't remember, like offhand, you're not sure who that is. Anybody here, if you ran a business, would there be one individual that had billions of dollars in trading every single day and you wouldn't know about it? Jamie Dimon doesn't have billions of dollars at his disposal. He's a paper tiger, but he can't create $1 billion liquid himself. He hasn't traded. He's a salesman. He's a mouthpiece. That guy can't tell you what a 210 spread is. He can't. This guy knows nothing about macro other than like the same kind of coffee and tea discourse that he has with other bankers, right? And then so you go, well, he's either a criminal or an idiot. And I don't think he's an idiot, so he's a criminal. So like, ugh. So when these dudes get on a high horse, that's what really irks me. I'm like, F you, dude. You step on everyone. Like, F you. Look how clean we're being today. I know their fees are higher, aren't they? Ugh. You know what? I have an account there where I have a business account and I have a personal account, and I take my money and I move it over into one account to like do whatever, and then the rest of it I just wire out and buy Bitcoin with it or whatever, stable coin, leave it on Coinbase, whatever. And even though the accounts are attached, when I move money from one to the other, like I can have $20,000 in one account and like $250 in another account. If I have a check go through, I have everything on auto billing for one of the cars, because we have a lot of cars on our account, they'll give me the check fee. Oh, $35, $40. I'm like, you know that the attached account has like 20K in it. Like, well, that's not how it works. You got to pay the fine. I'm like, dude, it's just like, they're so sketchy. And then you realize that the reason banks work this way is because there's no more service left in that business. There's nothing they can do for you. Nothing. So fees are how banks make money. They don't make it lending. Ain't nobody borrowing because they're not lending. So if a bank is not lending, this is a whole different discussion. This is more like an intermediary discussion. If the intermediaries, because banks are the actual central banks, especially in America, the Fed, you and the Fed, me and the Fed, we never interact. Moving the bullwhip of short-term interest rates, we don't have any, that doesn't affect our lives at all, a little bit. But when the banks, actual banks that we go to, quit lending, when they say, this is not an environment I'm willing to lend into, and remember, interest rates are always supposed to be the equalizer. An interest rate is a reflection of participation in the bond markets, participation in the debt markets, and that interest rate is supposed to reflect the amount of risk reward. Risk for the lender, reward for, or risk. Well, it's both. It's risk and reward for the lender and then the buyer of the bond. So, but basically in that yield curve, that's supposed to reflect the level of risk that is a fair assessment of growth and inflation expectations in the market. Therefore, whatever that yield is, that's where you should be able to borrow. But if you see a yield, okay, it's 6%. Okay, I want to buy a house. No. What do you mean? That's the rate. Nope. We'll do it for 2 points higher, but that's not the rate. Well, we're not doing it for that. So when banks decide they would rather hide in government debt, like in the debt markets, rather than lend, that's when the chaos starts. That's when the free flowing cash and credit availability starts to go the other way. And then you have tight illiquid markets. And when you stop lending, you stop banking. That's a problem. And so now banks have become these investment facilities, which are kind of weirdly commingled, which is very sketchy too. And so, man, it's just, there's just the bigger story is that we don't really need banks anymore. we can kind of be our own bank. And that's one of the things, I'm sure if you're a banker, a career banker, you are not a big fan of a bankless system where everybody essentially participates as their own bank. But is there anything any of you have done where you, in the last year, in the last 2 years, where you walked out, where you went outside and you said, dang it, I'm glad there are banks, man. They sure make life better. Thank God for these banks. I wouldn't have been able to do XYZ except for that bank. I don't know why you would even go to a bank. They were like, I got this call. They're like, hey, you qualify for a private banking. I'm like, I have private banking. Like, what? Not with Chase. I'm like, yeah, of course not with Chase. Why would I give you my money? I'm getting 5% by just sitting in Coinbase. Why would I leave you my money? Well, you get private banking. Cool. What's that? Well, you could, someone will call you. Call me what? I don't want someone to call me. Well, you have a concierge. To do what? I have that on my American Express card. What do I need you guys for? Well, what if you want to, they couldn't think of anything. Like the person selling private wealth management or whatever was like, I was like, can you guys do what Coinbase can do? They're like, what's Coinbase? I'm like, oh God, man. And on my phone, I have it where, here's how you know how stupid they are. I have it where on my phone, I changed the name to John Wick. So that whenever someone gets a call, it says John Wick is calling, because I think that's pretty funny. And the guy was like, well, listen, Mr. Wick. And I'm like, oh no, man, you know that's not real. God, you people are so stupid. So anyway, yeah. So I'm not a private banking client. How would one get a mortgage without a bank? Well, there are tons and tons of, matter of fact, right now, how you get a mortgage is private lenders. There are more and more private lenders. Like I have not worked with one single bank, and I'm not going to say what I'm doing on the real estate side, but it's a lot. And I've not worked with one single bank, not one actual bank, not Bank of America, Wells Fargo, Chase, none of them, none. Haven't even had a discussion with them. They've never even, not any of it, not the escrow agents, nothing. So, most of these are like private groups, private facilities that are doing all that kind of stuff. Oh yeah. Jamie Diamond's super secret inside. Yeah. He talked to Satoshi and Satoshi told him, yeah, I bet. That's the shut off button. The Bitcoin core developers would love to find that shut off button. They're like, we found it. We found it in the miles and miles of code. Can we move digital currency into Bitcoin and use Bitcoin to pay? Yes. I actually thought about doing a fun experiment in the property that I'm getting right now, which I'm going to actually live at, which, by the way, quick segue. Let me put up the little banner. Let me just get to the crypto news really quick, and then I'll dovetail back. So I'm getting a place that's big, and Brandon and I are going to do the investor weekends. The private clients know about this. This is for people that have a certain amount of NFTs that are revenue share from Node Market. We are going to be doing these investor weekends where they can come in and stay with us, and we just go over all of this confusing stuff for like a weekend. And then I'll also have a bunch of fancy ass cars and stuff like that they can play with. But the main thing is like learning how to use your wallets, anyway, that's what the investor weekends are. So we need a place big enough. So we figure 7, 6, 7, 8 bedrooms, something big where like a hotel type. Anyway, but the point of that is like to build your basic stuff, right? So, okay, that's what those investor weekends are. That's kind of another little cool thing of the NFTs. Great. Okay. Now, real quick, I will talk about Algorand had a little mention of a thing that like, so when you say, okay, look, when you say Algorand unleashes game-changing update, it's now faster than Ethereum. Ethereum's not fast. Ethereum is slow. They're like, it's I'll read it. Just Algorand unleashes game-changing Game changing. So I guess, I mean, if you go put on fresh socks in a soccer match, is that game changing? I don't know. This sounds a lot like fresh socks. Anyway, game changing dynamic lambda update. Bum, bum, bum. Woof. If it's a dynamic lambda update, I guess this is pretty awesome. So Algorand, they say it's a leading layer one. No. It's like the worst of the worst. Not worst as in tech, but like it's not leading anything. Anyway, it has successfully implemented its dynamic lambda update. This game-changing upgrade reduced block creation times, making Algorand faster than one of the slowest protocols on the planet. The only claim Ethereum can make is that it's faster than Bitcoin. And Bitcoin's like, we're slow and we don't care. And these guys are so funny. This is the Algorand Foundation. Checkmate. We opened the 2024 with the Algorand Gambit, our technical roadmap. It's so stupid. Like you read it and it's like here's where you know that they're trying to kind of copy what Cardano did, except that Cardano used like scientists and artisans throughout history, and Algorand uses like the Sicilian defense, Q1, the Rui Lopez defense, Q2 and Q2 through Q4, the Queen's Gambit, the Reti, the Casablanca variation. Shut up. Who's running crap over there? You guys, like, at a certain point, the people at Algorand need to like step back and say, how stupid do we look right now? Do we look real stupid or mostly stupid? And then someone in the office should go, real stupid, fellas. We look real stupid. Lambda, right? Text, I don't know who's going to get that. But anyway, the protocol upgrade, which went into effect today, will increase network performance, meaning higher throughput and lower block times. Great, that's great. Except that Algorand is fine. It's fast. The problem is not that. The problem is no one uses it for anything. The dynamic Lambda update, which went live recently, has resulted in a 20% reduction in block creation time. 20%. So did it go from 4 seconds to 3.6 seconds? Oh my God. 3.2 seconds even. Holy smokes. What am I going to do with all this extra time? The average block times are now under 3 seconds. This is amazing. It's a remarkable improvement from the previous average of 3.3 seconds. You guys just take that extra third of a second and do whatever you want with it, because Algorand. And it's a testament, again, their words, it's a testament to Algorand's commitment to pushing the boundaries of blockchain technology. Now, I'm not going to go and I'm not going to promote any of these DAGs, but do you know that these DAGs can do hundreds of thousands of transactions a second because of the way that that kind of lattice structure, that kind of gossip structure, like the whole TPS metric, transactions per second, it doesn't mean anything. It's not how many transactions you can do. It's transaction finality in a safe way. Can you finalize transactions? Like when credit card companies like, we do 4,500 transactions a second. This is true. But what's the finality? Well, 90 days. Oh, so really your block time is 90 days. Don't big it up. You mean you can do pre-funded settlement. You can signal 4,500 times a second, but you don't finalize a transaction for 90 days. That's slower than Bitcoin by a wide margin. So I don't know, man. Seems like much ado about nothing. The dynamic Lambda update is not just about speed, it's about scalability and performance. The update adjusts the finality of blocks based on network congestion and other factors. They don't say those factors. This dynamic adjustment allows for faster confirmations and improved scalability. Whoa! Crucial for the growing demands of a digital economy. Well, maybe. I don't know what growing demand there is for like Algorand, unfortunately. I'm just holding it because it's probably going to do just great during a bull market, because everything will go up during a bull market. But anyway, the update is part of their broader, stupidly named roadmap for the year, which includes plans to support Python programming language, transition into a more non-archiving relay node structure, updates to its consensus mechanism. They'll probably copy Cardano, and a shift to peer-to-peer gossip network similar to Bitcoin. That's a very loose statement. Bitcoin's not a gossip network. It's a proof of work kind of, I don't know. You could make a weird argument. It's not a gossip protocol. They're mixing too much stuff. I wonder if this was translated like out of English and then back to English. Sometimes that'll happen when these news articles get pumped around, especially marketing fodder like this. The dynamic Lambda update is a significant milestone for Algorand and the broader blockchain community. I know I've been waiting for it. Who here has just been on bated breath waiting for Lambda? You were like, God, the second that Algorand releases Lambda, this is when the bull market starts. I've just been waiting for Lambda. By achieving block times under 3 seconds, Algorand has set a new standard for speed. What do you mean? For a new standard with who? 3 seconds is slow. I don't understand. These guys, man. This is the new standard. What about all the other companies? Well, those are ahead of standard. Okay, but you're like 17th. Yes, but we're 17th standard but this is the new standard. Yeah, but you're at the bottom of the barrel, Algorand. You've done nothing. Yes, but setting standards is what we do. Cool. Awesome. Standard setters. Yes. Oh, God. Anyway, it's done nothing. Token's done nothing because that's a nothing. Anyway, there you go. Nothing to nothing. And then just before we get into cognitive bias, I'm going to go through all the 25 cognitive biases here in a second. But when to start taking profit? If there's hard and fast rules, right? Which we talk about. I'm not going to talk about those now, but you guys know what they are. There's rules. You each need to have your own rule for when you would take an exit on something. You can't leave your money in crypto tokens forever. You have to do something with it. Now, that something could be converting to stablecoin and going and parking it somewhere and grabbing some interest income, something like that. But you can't be all crypto all the time. At some point, you need to convert from the electron space to the atom space, right? And so you have to have some rules for yourself. We have rules, digital investor crowd, we have rules and stuff like that, which we talk about behind the wall and all that. But even if you're just Johnny casual investor, you have to have some exit strategy. I was at the Starbucks today and the guy's like, I'm gonna watch, probably just day trade in and out a little bit. I'm like, what are you saying? I'm just gonna day trade. I go, what are you going to day trade? You go, oh, just in and out of Bitcoin. Just make like a quick 1,000 here, quick 1,000. Oh, because it's that easy. Just make a quick 1,000 and then a quick 1,000. I'm like, well, if you're in and out, making a quick 1,000 is actually making a quick 600 and change, because you're going to have a 30% capital hit. Just makes it quick. Right, because you know how to just make a quick profit every time, because it's that easy. Just make a quick profit. Hey, everyone here, just go out today and just make a quick profit over and over. Just do it real quick. I had a buddy who actually is a financial advisor at a firm, and he called me. He's like, this is how even financial people can be out of touch. And he's like, hey, what crypto do I need to be in? I'm like, I'm not going down that road with you, buddy. We do this all day, every day. Don't come Johnny come lately me now that there's an ETF that came across your desk, and now you want me to give you a list of stuff to buy. I said, buy Bitcoin. You can buy it right there. Your own fund. I think he may be with Fidelity. I said, you guys can go buy in the ETF, buy Bitcoin. What about the other stuff? He's like, I don't want to have unrealistic expectations. I just want to do like a 10X, but I'd be happy with the 3X. Oh, you'd be happy? You'd be happy with 300%, would you? Just each year, just an easy 300%. Man, well, mother effer, we'd all be happy with that. I mean, if we can't all get 1,000% return this year, maybe we'll just get 300%. Like, I'm like, listen to all of the weird assumption that's cooked into that statement. Like, what, man? Like, stop. Just go buy Bitcoin or don't buy anything. He tried for like an hour to get me to tell him to buy stuff. I'm like, no, man, I'm not doing that. You can't do it that way. These assets, you have to know them as well as you know your friends. And you have to know when your friends are hooked on meth and it's time to get rid of those friends. Like they're no good anymore. Like it is what it is. Stop with the nonsense. But everybody here, based on your level of experience and your level of understanding of these assets, as we go into a bull market, you need to understand that you have to exit at some point. Not all of it, but you have to have rules that you live by to exit. You need trading, investing, life in general. It needs to be more rules-based than not. Like my emotions, I'm guided by emotions. Well, that's stupid. You're going to fail. Like, no, because my emotions never lead. If you follow your emotions, that's a bunch of old bumper sticker bullcrap that you read in the back page of The Secret. It's all bull smoke. All of it. See, I almost cussed just then. It's all crap. If you take a picture of a Ferrari and you put it on your refrigerator, you get a Ferrari. That's basically what I got from The Secret. You take the stuff that you want and you stare at it, and that's going to make you do whatever you can to achieve those things. Oh, there's some merit to that, but that's about it. It doesn't make all it. God. Anyway, we're not going to go down that tangent, but you get it. But for the rest of us that want to actually continually and perpetually succeed, you need to have a rules-based strategy. Be a critical thinker. Be pragmatic. Use game theory. Understand what we're about to talk about, cognitive bias, that they work against you. They derail good, smart, sane, reasoned thought. And if you do that, you just iteratively make better decisions than the people around you, and you will melt up and they will go away. And then when they're like, how come we don't go hang out anymore? Then you say, well, buddy, eagles fly alone. They're like, what does that even mean? Like, just go. I like that. It's kind of dickish, but people don't know why exactly. Like, hey, how come you don't want to hang out? Eagles fly alone, buddy. What? I'm not sure what you're saying. All right. And real quick, before we go behind the wall, can you please explain why the ETF didn't really do anything? Dude, the ETF did a lot. Aaron, the ETF did a bunch. Now, why it didn't do anything directly to the price, like many analysts said it would? Well, you know that we're, as of today, not even 1 week into it. Not 1 week. We're not 7 days into it. I think to see the full effect of the ETF, you need to see when the marketing begins and the way that they market. So when the marketing machine turns on, then you'll start, because right now they finally got the green light. Now they're giving their marching orders to all their salesmen, which that's what all these firms are. They're just sales facilities. Stock brokers, there's no broking. They're salesmen. When these salesmen go out and try to pilfer that $150 trillion worth of wealth sitting on the sidelines, if you believe Fundstrat, the way that they sell people the idea of going to 1 to 2 to 3% into Bitcoin as digital gold, and then as currency units enter those funds, they have to go to the market and buy Bitcoin and accumulate Bitcoin, and Bitcoin gets parked in these funds. And that happens more and more and more, and there's less available Bitcoin. Then you'll know. But it's not like day one, boom, because day one is not boom, there's tons of money. They were already, these ETFs are already the most successful ETF products in history. And it's not been a week. Remember, it hasn't been a week until this afternoon. We're only 6 days in, Aaron. Let's have a little more patience, buddy. Let's have a little bit longer vision than 6 days. Okay. Maybe Algorand can get, I know, right? They need to do spammy NFTs, meme coins. That's what would save Algorand. You have to have rules. Rules. Roofster nails it. You have to have rules. Okay. Yeah, speaking of that, I actually bought some more Bitcoin. Ooh, when was it? I have to go look. It was over the weekend, but it was when it started dipping into the 41s. I'm like, yeah, to me, because I don't look at Bitcoin as being 40 whatever thousand. I look at Bitcoin as being about 150K. So the Bitcoin that I'm buying is sitting in that wallet until we're at 150K. It's not getting traded. So that's just kind of the way I look at it. It's not the only thing I buy, doing all sorts of clever things, but we don't talk about those things. And yeah, written rules, review them. Well, you don't have to review them daily, but you got to live by something. Okay, let's go behind the wall because this is more brain stuff. We're going to talk about the 25 cognitive biases that steal from your success. There's a lot of them, but these are the 25. And this is kind of a little shout out to our former colleague who hated crypto, but yet they owned tons of Apple and tons of Bank of America, which is also kind of indirectly involved in the crypto space. But Charlie Munger, who passed a few weeks back now, and you know, whether we like him or whether we hate him, he was a many times over billionaire, like an old school value investor billionaire. And probably if he was a little younger or had the right discussions with the right people, he and Warren would probably be quite excited about the crypto space. But you have to admit, crypto is full of douchebags, and that it can sometimes it's hard to steer around the douchebags. If it's, you know, if 99% of something is crap, like if you had a soda and they're like, well, what is it? Well, it's 99% poison and 1% magic. You're like, man, a lot of work to get to that magic. Yes, it is. So anyway, let's go back behind the wall, and then we will talk about cognitive bias. How about that?
We're going behind the proverbial wall now to continue the broadcast privately for the digital investors and digital private clients. If you'd like to join us, simply go to nickblacknext.com and subscribe to one of our plans and immediately take advantage of our library of tools, tactics, and information. It's all designed to help you learn, grow, and manage your portfolio like a pro. Join us now.